Welcome to the weekly market recap with Sampath Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka's foreign reserves declined marginally to $6,824 million in January 2026. This was slightly lower than the $6,838 million recorded a month earlier. The decline came despite the central bank purchasing around $200 million from the market following Cyclone Ditwa. According to the report, reserve collections were only slightly above debt repayments. Analysts point to policy rate cuts in May 2025, along with a reduced deflationary stance as factors that limited the pace of reserve accumulation. Analysts point to policy rate cuts in May 2025 along with a reduced deflationary stance as factors that limited the pace of reserve accumulation. In December, the central bank purchased $272.5 million and sold $18.8 million to banks in order to manage currency pressures under the flexible exchange rate system. In January, purchases amounted to $209.8 million, while sales stood at $9.5 million. The central bank has also sold dollars to the Treasury in exchange for cash, reducing liquidity through what analysts describe as unsterilized sales. Sri Lanka continues to operate under a flexible exchange rate framework. However, critics argued that such a system can undermine confidence and increase uncertainty. The country defaulted in 2022 following repeated episodes of foreign exchange shortages and rising external borrowing pressures. Analysts have linked those developments to policy cycles that created financing gaps after rate cuts. Some analysts now suggest that the Treasury should independently purchase dollars and collect certain taxes in foreign currency. They argue this would reduce exposure to inflationary pressures and help avoid renewed borrowing risks in the future. Sri Lanka will not face another sovereign debt crisis and will begin repaying its restructured external debt as scheduled. This assurance was given by Central Bank of Sri Lanka Governor Dr. Nandalal Veerasinghe at an event organized by the Ceylon Chamber of Commerce. He dismissed claims that the government and the central bank would be unable to meet debt obligations from 2028 onwards and described such concerns as misguided and warned that they could weaken investor confidence at a critical stage of economic recovery. The governor noted that Sri Lanka maintained a strong record of servicing sovereign debt until 2022 when foreign reserves were severely depleted, forcing a suspension of payments. However, he said that the country's position has since improved significantly. In 2025, external debt servicing amounted to approximately $2.5 billion. Looking ahead, annual debt repayments are expected to average around $3.5 billion. At the same time, the central bank aims to build gross official reserves to between $8 and $10 billion over the next 2 years, reducing the need for any further restructuring. Meanwhile, Director of Colombo-based leading think tank also stated that concerns over post-2028 repayments are overstated. From 2028, Sri Lanka will begin capital repayments on bilateral loans to Japan, Exim Bank China and Exim Bank India. Bullet payments and maturities on macro-linked bonds are also scheduled to commence that year. Separately, the Finance Ministry announced that an investor call has been scheduled for holders of several series of international sovereign bonds. According to the ministry, the call will present the governor's debt report published on 31st December 2025, along with updates on fiscal developments and key economic indicators. According to the Public Debt Management Office's latest quarterly debt bulletin, Sri Lanka's total external debt stock stood at $37.2 billion at the end of September 2025. Multilateral lenders account for 37% of the external debt portfolio, followed by commercial debt at 34% and bilateral debt at 29%. International sovereign bonds represent about 81% of commercial liabilities. The bulletin also reported that by the end of 2025, agreements covering approximately 94% of the creditor commitments had been concluded since the April 2022 default, enabling the government to resume regular external debt servicing. Overall, authorities maintain that Sri Lanka's debt trajectory remains manageable, supported by restructuring progress, reserve accumulation, and continued engagement with multilateral lenders. Sri Lanka's tea exports to Iran are showing early signs of recovery following recent instability in the region. According to the Sri Lanka Tea Board, shipments had slowed significantly for several days in early January due to unrest and concerns over possible external intervention. Sri Lanka Tea Board chairman stated that the exports had nearly come to a standstill for 5 to 6 days during the height of the uncertainty. However, he noted that exporters are now gradually resuming shipments as conditions improve and communication channels with buyers have been restored. He explained that the exports to Iran are currently being routed through Dubai and have improved compared to the situation 2 weeks earlier, although volumes remain below normal levels. Obesekara said confidence among traders is still rebuilding, but communication with Iranian buyers has resumed and assurances are being exchanged. The exports are being carried out under Sri Lanka's tea for oil barter mechanism with Iran. Under this arrangement, the Ceylon Petroleum Corporation transfers the Sri Lanka rupee equivalent of $5 million per month to the Sri Lanka Tea Board, which then pays local tea exports for shipments to Iran. At the same time, Iranian tea importers settle payments in Iranian rials to the National Iranian Oil Company. Ceylon Petroleum Corporation Managing Director had earlier stated that recent comments by US President Donald Trump regarding additional tariffs on countries trading with Iran do not apply to Sri Lanka's barter mechanism, as it functions as a repayment arrangement. He also noted that of the original $251 million owed under the agreement, around $90 million remains outstanding. Iran's annual tea demand is estimated at around 100,000 metric tons. However, domestic production meets only a portion of this requirement, making imports essential. The gradual recovery in shipments is therefore seen as a positive development for Sri Lanka's tea export sector. Sri Lanka secured approximately $1.48 billion in foreign development financing during the financial year ending December 31, 2025. According to official data, the funding came as major multilateral partners increased budget support to help stabilize the economy and respond to the impact of Cyclone Ditwa. The International Monetary Fund and the Asian Development Bank were the largest contributors, accounting for nearly 8% of total disbursed funds during the year. The strong inflows, particularly in the final quarter, reflected two key factors. These included improved political stability following the conclusion of the 2024 elections and the urgent mobilization of emergency financing after Cyclone Ditwa, causing widespread damage in late November 2025. The International Monetary Fund doubled its contribution compared to the previous year, releasing 2 tranches totaling 508 million special drawing rights, or approximately $670 million. The Asian Development Bank also accelerated disbursements, providing more than $500 million during the year, including a significant release in December. These funds supported financial sector stability and power sector reforms, while also creating fiscal space to manage post-cyclone recovery efforts without disrupting the reform program. Other development partners also maintained support. The World Bank, through the International Development Association, disbursed over $56 million for social protection initiatives. The OPEC Fund provided $50 million for development operations and road rehabilitation. The Asian Infrastructure Investment Bank contributed over $30 million for urban regeneration projects. Among bilateral partners, the Saudi fund released funding for university infrastructure, while the Export-Import Bank of the India disbursed over $13 million. The European Investment Bank also provided financing for water management projects. Overall, the 2025 disbursement pattern signals a transition from crisis management to policy-based financing, supported by progress under the International Monetary Fund program. However, the late-year impact of Cyclone Ditwa required swift support for development partners to safeguard economic stability. Let's take a look at this week's Treasury Bill auction results. With the recent Treasury Bill auction, the 91-day T-bill rate stands at 7.72%, down by 8 basis points. The 182-day T-bill rate stands at 8.07%, down by 10 basis points, and the 1-year T-bill rate stands at 8.31%, down by 2 basis points compared to the previous week. Thank you for watching. We'll be back next week.